Obviously, they were able to outrun raw costs, but their China numbers were good. And it was a refreshing surprise quarter and a place to go. Now, it's not a place to go if you're, seeking excitement, but it's a place to go if you're seeking yield. It was a good quarter.
I think people are spending more time at home, and they're spending more money on their household products, and they seem to be prioritizing those household products, toilet paper, tissues, even premium brands like P&G. They didn't see a trade down at all.
Not at all. Now, this is one where people, if you're looking for a work from home, you could do worse than that. The sectors that I like are work from home, okay? And I still like cybersecurity, and I think people are ignoring the fact that at any given moment, we can expect something horrible to happen. CrowdStrike and Palo Alto are my favorites.
Right, and they've sold off. They've gotten dragged in with the growth trade.
They're the only growth stocks. I mean, by the way, there was a terrific note today recommending Snowflake.
Saw that, yeah.
And the thing that's so interesting about Snowflake is they actually have real growth. But is real growth a curse? Oh, look at that.
At what price? At what price, though, Jim?
I don't know. I mean, if I look at DoorDash, people are trying to call bottom on DoorDash at 5 times sales. I'll take 17 times earnings any day. Fang is cheaper than those stocks.
Get the Frank the data platform tank.
Well, Frank the tank is it's kind of a
I get it.
Cinema reference.
$250 price target there.
But that's
initiating coverage.
I mean, people want so much to find something that's growth that they can get behind. And then you look at a DoorDash and you say, well, Tony Hsu's doing a terrific job. But 5 times sales? Go back to 2016. Those companies that sold
so you
sales.
Like it. You think this is the opportunity for stock?
Well, nothing that sells at 5 times sales.
Oh, too high.
Anything that sells at an actual multiple to earnings. Remember, I believe you have to be in companies that make things or do stuff at a profit, return capital that are not expensive. I'm asking for 5 things. Give them to me.
Is Coca-Cola one of those? Because
yes.
that is leading Staples.
Yes.
It's also leading the Dow today. 18% organic revenue growth is better than any analyst that I saw preview this company. They've got pricing power. They're also seeing higher volumes. And I think importantly, they did not lower the guide at all, given all of the factors that will affect them, from currencies to consumer spending to the China lockdowns. The Q1 net numbers in China were negative, to the inflation story and the fact that, as Quincy said, it's well beyond just commodities. Yes, corn syrup prices have shot through the roof, but there's also transportation and logistics and just general expenses.
Yes, but he did talk about the idea of more canned sheet. Now, when you think about what goes into, obviously, Coca-Cola. I would say transport's more important than anything. They can't find the drivers. But the fact is, this was the first time I heard a CEO saying that some of the companies are reacting to the strength. Some of the plastic companies are trying to figure out whether they should build more plants. But yes, the aluminum, the companies that make cans are finally recognizing they've got pricing power and they should go do their thing. Coca-Cola did very well in 2000. So if you go during the April 2000 period where the dot-coms fell apart, you went to Coca-Cola, you went to Bristol-Myers. So, I mean, I think people are taking that strategy.
It's already up 13% this year.
Look at J&J for a second.
Yeah.
That quarter was pristine, and yet the stock fell. Is that right? AAA balance sheet, good yield, breaking into 3, finally get the medical tech doing well. And that day, people didn't care. And we're going to look back and say, that was my last chance, J&J. But it's an elite group.